upside here on the 1 hour time frame, which increases the probability of support and resistance areas, and two potential setups, one more risky and one a lot more safe. Now this is the weekly time frame Coinbase chart with an all-time low of 2.825. And you can see that I only analyzed the right side of the all-time low, and that is for good reason, because this move up here is the first time on a weekly time frame that we can easily identify a big five-wave move towards the upside that breaks the downtrend. And that is something that I will always wait for. As long as price is not showing a easily identifiable big high time frame impulse to the upside, I have no interest in all of this, because I don't want to risk my portfolio or risk my money trying to snipe the all-time low. Instead, I patiently wait for a big impulse to the upside, which I will completely miss, and that's fine. Then I wait for the retracement or the range to follow, and that is the moment where opportunities will come my way and I can attach probabilities to it, because now I have information that I can work with, which is the reason why I now also present this chart in today's video. And in a way, it is quite similar to SUI. And we analyzed SUI a long time ago already. We started analyzing this asset. Price here moved to the downside, zero interest. Then you get a nice double 1-2 impulse up with a multi 4-5 at the end. That is your wave one. You look for a corrective retracement to the downside, which was a double zigzag on the lower time frames, touching support levels. And that is the moment it is interesting to look for price to move to the upside and create new all-time highs. In this case, of course, taking out the high here, which then happened at a later stage. So what we are looking for here on ICP is a five-wave move towards the upside, an impulse, with the highest amount of volume in your wave 3, which is exactly what you like to see, followed then by the retracement. Now this move to the upside is in a bullish scenario counted as a wave 1. The retracement is then counted as a wave 2. The most common target area for a wave 2 is the 0.5 to the 0.786 Fibonacci taken from the start to the end of your wave 1, giving you a target area between 7.7 and 4.3. Now you can see that price here touched the 0.786, or actually you can't really see it because of the fib time. Let me quickly remove it here. So you can see the wick into the 786, which would be a maximum target for a wave 2. Now the vertical line on my chart, that's a fib time, which is taken from the start to the end of wave 1. And basically what it does is it compares wave 1 in time with wave 2. Wave 2 here, if this would be the low, ends exactly on a 2 fib time, meaning wave 2 is twice the length of wave 1, which is perfectly fine. And you can also see here a little 1 on the chart. And this is a 1-to-1 trend-based fib extension taken from the start to the end of A to the end of B, comparing wave A in size with wave C in size. And the most common target for a wave C compared to A is the 1-to-1. So it is quite nice and also quite interesting that price is reacting at the 1-to-1 in confluence with the 786 on a 2 fib time for a potential end of your wave 2. Of course, there's always the potential that, yeah, maybe you get another 4-5, but you only really want to sweep the low. You don't want to touch the 886 at 3.55 because that would significantly lower the probabilities of this over here being a wave 2 and would arguably be more bearish. But at the moment, I positioned wave 2 here at this particular low. Now, after a wave 2, you like to see a wave 3 towards the upside, which then gets us talking about what I put there on my chart, like the green line and the blue line. And the blue line is your wave 3. So that is your wave 1, your wave 2. You look for 3, sideways 4, and 5. Generally, a minimum target for wave 3 is the 1.618, a trend-based fib extension taken from the start to the end of 1 to the end of wave 2, which currently I put at the low over here. Now the 1.618, after being touched, eventually, maybe you go to the 2.618 or higher, but generally the 1.618, you eventually expect a sideways 4 and a wave 5. But it doesn't mean that if price cannot reach the 1.618, which by the way, if you want a price, it's sitting at 107, which of course is insane. We're currently sitting at 5. So not yet completely sure if I want to use the more logarithmic targets or the linear chart targets, with the linear chart being a target of 33, which does sound a bit more sensible in a way. But this is the reason why I didn't include the price in my fibs here, right? It's more about the fibs than the price at the moment, because wave 3 nonetheless should be a big 5-wave impulsive structure. But if we don't reach the 1.618, right, it doesn't mean that it is bearish, because you can also form a multi-1-2 where you have a wave 1, you get your wave 2, you form another 1, another 2, and then you start your big wave 3, which actually is more bullish. A double 1-2, you expect a bigger wave 3 to the upside, followed by 2 4 5s, leading to much higher prices. Also, this wave 1 does not necessarily need to take out the all-time high per se. This wave 1 does not need to move to the 1-to-1 trend-based fib extension, right? You can also have an internal 1, 2, 3, 4, 5, so inside this range, that maybe touches the 886 taken from the high to the low, then get a corrective move down. That is most important. So you want an impulse up, just like we had here, and then another corrective structure down, right? That is what you are looking for in both wave 2s as well as wave 4s. And then you're looking for price to continue towards the upside. Now the invalidation, of course, is the all-time low, and the bearish scenario is counting this impulse up as a wave C of a flat structure. A, B, and then a wave C towards the upside. For me at the moment, lower probabilities, right? It's an alternative for me, but this is also where risk management comes in, and we have to keep an eye on what price, of course, is doing locally. But if this would be a flat ABC, then you would look for price to continue down impulsively. So preferably you would look for another wave 1, 2, 1, 2, and then get a big wave 3 to the downside to absolutely 0, basically, right? So yeah, at the moment, an alternative, this is what I keep an eye on for now. And the invalidation is very easy. It is the all-time low. So, it makes trading this asset or, investing in it incredibly easy. You easily know your invalidation. Now, if we then look at some confluences on the chart, then price touched my support box over here. And this support box contains a monthly order block. Actually a weekly one, not a monthly one. So it's the order block on a weekly chart, this red candle. And the monthly thing I wanted to talk about is a monthly point of control. So from a month here in the past, the month of November 2023, the point of control was touched here with this particular low. Now to the downside, of course, at like around 3, we have some more support locally at 4619 to 4610. To the upside, first area of resistance, weekly naked point of control at 5.329. And then you can see we have some gaps towards the upside, right? If we can flip this level and move up, break the high here at 6.12. Next up, 7.232. And then we get to some volume levels again. So the red levels are volume levels. The colored levels like yellow, purple, those are time frame horizontals. Now, I am personally mostly a fan of volume, so the red levels for me are always the primary ones that I keep an eye on, which means that to the upside, those are my most interesting areas of resistance. And you can see that also here, we have a monthly naked point of control and a weekly pretty much at the same area, being around a 14.5, 14.6. Now then I like to talk about Elliott wave simplified. So without counting this structure here in detail or this move towards the downside, it starts to be quite interesting to look for a bit of a reversal to the upside anyway. And what I am going to explain now on this chart is related to what I talk about in the Elliott Waves Beginner's Guide on my channel, the first video here, the simplest way to use and trade Elliott Waves. It literally changes your approach. It's super easy. You don't even need to count, right? It's more about structure. But you still use Elliott wave knowledge, even though you might not know really a lot about Elliott waves. So if we look at this move to the downside, right, of course, we have our first structure, second structure, but in an impulse to the downside, what we like to see is a bit of a grind in the beginning, then a sharp move down, And then we like to end an impulse with a bit of a grind again, preferably on a declining amount of volume. Now you can see that here we had our messy start. Then we get acceleration to the downside on peak volume as well. Right? And then we start to create lower lows on price on a lower amount of volume. And this is like a bit of a signal that a move to the downside starts TP, including some important support and resistance areas, and two potential setups, one more risky and one a lot more safe. Now, this is the weekly time frame Coinbase chart.
Check it out. You can access our live streams from YouTube or on Discord. And because we covered today, I talked 20 minutes around the cycle and when I assume a top might form and what the next window is that we need to pay attention to. So nothing really super new, but all consolidated. So if you're interested, that was kind of the topic of the first 20 minutes in our member live stream today. Plus, I think around 40 coins we looked at. Check it out if you're interested. But yeah, I'm not going to talk too much here about the daily chart, but just to show you now that we're entering a new week, the resistance area to watch is between 115,425 and 120,400. Again, I do not have evidence that a major top has formed, but there is something really, really important. Now, if you take everything together I talked to you about today, there is literally no indicator that at the moment highlights a top has formed. It's of course possible and the risk is high, but there is no confirmation, which I explained it today in the live stream. I explained it in the videos today and over the last few days. However, I believe the risk is high. I believe that possibly in Q4 we could see some decisions. One more thing to mention is the DXY. So if we open here the DXY, DXY, yep, the updated one. Look, or no, not the short-term one. Let's open the weekly because this is so important. On the DXY weekly, I do not cover it very often here, but on the weekly chart, or 4-day, doesn't matter. It shows that we are approaching a trend channel of a, well, more than a decade-long price channel that formed. We're approaching the lower boundary line. We are also approaching Fibonacci support. And assumption is that we're approaching a key swing low. Now, look, the DXY has rallied quite well between, well, you could say 2021, right, mid-2021 and October 2022. That was the bear market. That was the crypto bear market, guys. Okay, and now they are not always conversely correlated. Not always, yeah, but on the macro, you actually see that often when the DXY formed a low, then Bitcoin formed the top. Okay, that is actually shown if you put these two together, which I'll show you in a minute. But the overall idea, we are very close to a major low on the DXY. And we might not see new highs, but we might see a B-wave rally. And as you know, they might even overshoot. Either we get another high in a wave 5 or a B-wave, but it could be a multi-year rally. Now, again, it doesn't mean that, for example, when the DXY bottoms, Bitcoin has to top immediately. Like in 2021, we actually had the low, like a double bottom structure here, early 21, mid 21, yeah. And Bitcoin really only formed a major top in November. So, but that was still very early, like that wasn't the first, you could say the first quarter of this rally. So I'm just saying, like we might have bottomed on the DXY. Maybe we get another low. I slightly prefer another low, maybe to hit $95, but I'm saying that all fits very well, that idea that in Q4, like it often happens, a major top forms. So now you see that as well if we switch here to the, like if we overlay the DXY and the Bitcoin chart. And well, you can easily see that whenever there was a major, a major low, yeah, or very often, this kind of coincided with a top on the Bitcoin chart. Yeah. So low here in 2021, double bottom, kind of double top structure as well, slightly maybe shifted, yeah, offset. Also in 2018, 2017, we had the same situation, significant low here, significant high here. And I mean, I'm not saying this has to happen again, but then again, that swing high here on the DXY kind of, yeah, aligned very well with Bitcoin's bear market low. So there seems to be that inverse correlation that you probably know about. That doesn't mean they always have to do that, right? But it's just something very, very striking, especially, again, we see it again on the DXY chart. The Elliott wave structures indicate we could be close to a low, maybe one more low. Bitcoin as well, we could be close to a top, maybe one more high. So I think just be aware, things kind of align, and I'm definitely going to keep an eye on this. Now let's take a look at the shorter time frame for BTC. By the way, if you want to stay up to date about all of this, make sure you subscribe if you haven't done that yet. Also, you can feel free to join either the membership, or you can also follow us on X, where I sometimes share this stuff as well. Looking at the Bitcoin short-term chart, then I just need to go to the shorter time frame. Yeah, you can see that Bitcoin is still it hasn't made a decision yet. So the let's say the expected end of the week volatility that we normally get hasn't shown yet. So I have added, however, obviously we already had our support area on the chart. I've now added a micro resistance area that the price is currently pushing against. It's between $111,380 and $112,730. So we could see potentially from a short-term bearish point of view a 1-2 setup, and then we break down. But I do not fully believe that. That is possible, yeah, especially as long as we're holding below 112,730. But I need further confirmation with a break below support at 108,557. Because what we might even see, and I shared that earlier today, is just that we bottomed here on Monday, the 1st of September. This is an A wave up. This here is a B wave. And we might still see like a pullback there, yeah, and then we can rally. So again, we might spend a little bit more time between support and resistance, but hopefully over the next few sessions we see a breakout. So we have therefore a support area on the chart, we have a resistance area on the chart, and until we break either above resistance, maybe you're a member and you missed the live stream, the recording is available, or if you're not a member and you might want to sign up, check it out. You can access our live streams from YouTube or on Discord. And I'm just saying, because we covered today, I talked 20 minutes around the cycle and when I assume a top might form and what the next window is that we need to pay attention to. So nothing really super new, but all consolidated. So if you're interested, that was kind of the topic of the first 20 minutes in our member live stream today. Plus, I think around 40 coins we looked at. check it out if you're interested. But yeah, I'm not going to talk too much here about the daily chart, but just to show you now that we're entering a new week, the resistance area to watch is between 115,425 and 120,400. Again, I do not have evidence that a major top has formed, but there is something really, really important. Now, if you take everything together I talked to you about today, there is literally no indicator that at the moment highlights a top has formed. It's of course possible and the risk is high, but there is no confirmation, which